Mr. Trump and other people. So hopefully we'll come to, it will going to be a gradual process, not a very disruptive, abrupt process. And I think that's what's going to happen. It will get there finally, but it's going to be a long, drawn-out process because there are too many things involved in just cutting off something from someone who was the main supplier for us.
It's definitely a long drawn process, but Naveen, if you talk about the impact in terms of the fact that it is still accounting for the large part of the global supply. So what do you think will be the impact on freight as well as the refining margins, if you can specify for Asian countries per se?
That's a great question. Indeed, so India especially has been taking advantage of excellent refining margins as a result from getting discounted Urals Russian crude. I think what we'll see now, due to the rejigging of global supply chains, rejigging of flows, is a temporary bump up in freight costs, and as a result, landed costs into Asian markets for crude oil will increase as well. Off the back of that, we are seeing, not only Brent crude prices move higher today, as you mentioned, but also the Middle East and Dubai benchmark. A lot of the Middle Eastern crudes that travel and land into Asian countries are benchmarked against Dubai. This index is also moving higher. So as a result, landed crude oil costs into Asian markets will be more expensive, eroding some of the refining margin as well. Nonetheless, depending on the complexity of certain refineries that we have in India, in China, and other Southeast Asian nations, you have the potential to also take it into advantage the fact that gas oil prices and gas oil margins will also spike up higher with potentially lower availability of that Russian product. So there are ways in which, if you're a more complex refinery, you'll be able to profit from taking advantage or leveraging new potentially export routes for products. But all in all, as you mentioned, this whole sanctioning will have a disruptive effect on freight, disruptive effect on refining margins in Asia, and these will add to the general cost basket.
And of course, we'll be watching out for how, companies really move to diversify to other oil sources and what's India's strategy is going to be. But let me bring you in, Mr. Rao. Mr. Rao, you essentially were defending what Donald Trump is doing with respect to stopping this war between Russia and Ukraine. But isn't this essentially U.S. doublespeak on the matter, given that it sources materials for its fertilizer and nuclear and other industries from Russia? So if the United States is essentially accusing countries of funding the war, why does the U.S. refuse to acknowledge that it is an active contributor and it was the United States itself which encouraged countries to buy from Russia to maintain market dynamics?
Yeah, I mean, that's a good point. I think he was stumped when someone pointed out to him that you're still buying those things. So I'm sure they're working on it. That also takes a long time. But that's a different category. I don't know how big that part is. Oil is Russia's biggest lifeline, and they need, if you can squeeze that, I think that's going to have a more immediate impact than the rare earth materials, which is not that big from what I read. So it's big, but not that big. Every bit counts because that's a commodity that everybody wants. So I'm not belittling that. It's important, but at some point it'll get to that. I think that's the second layer of squeeze that we will see to do that. But at this point, cut the main lifeline, which is about 20% or 30% of Russia's GDP. So that's a huge thing, and that will really throttle them. But yes, there is some doublespeak. There is some issues out there that need to be resolved. But U.S. can get away with that to some extent. They will answer that, and he said that he's going to address that issue down the road. But at this point, it's all about oil, squeeze, and that's the operative word. And get this war to an end. And Putin is not agreeing to it. He's going to fight it out. There are a lot of issues out there. These are strong leaders that will not give in to threats and intimidation. So they need some off ramp for both of them do. Just get off and come to some kind of a settlement there. So I don't know what that is and when that will happen, hopefully soon, because it is definitely affecting the rest of the world.
Mr. Rao, historically, right from 1979, the U.S. sanctions have not yielded any peace outcomes, right from Iran to any other sanction which U.S. has put. But do you think this time history is going to change?
Yeah, I think this is good. This is going to be a joint effort, and I think it's in everybody's interest to do this. So I think they will. This might succeed. It's going to take some time. I mean, we saw with Iran, they've come up with different ways to raise money. They have the barter system where China does construction work, and these guys pay in that. So some kind of a barter system to bypass the sanctions. So there are ways around it. All the intermediaries and all oil comes through the third parties. So that's there as well. So now European Union is also taxing or banning ships that dock on their ports. So things like that. So now they want to go all out, 360 view to just squeeze them. So I think this time it might work because now it's getting really long and really painful for everybody. So I think that's the main thing. Hopefully it will settle, like I said, but it's going to take some time. Yeah, both countries, everybody's diversified. They know this was coming, so it's not going to be easy to find where things are. But it's a process, like you said, and in the end, they will get to that point where you squeeze everything out of them.
Right, Mr. Rao. But on that note, let me also specify and clarify what India's position has been. In fact, there was a statement that was released by the Ministry of External Affairs, which essentially stated that India's decision to buy energy or to not buy energy is completely dependent on consumer interest, and we'll have to watch out for how India looks at this particular, move by the United States to sanction two very important companies that are based in Russia, and of course, we'll be diversifying our sources of energy as well. Well, on that note, thank you very much, gentlemen, for taking the time out and speaking to us here on 80 Now, Ankur. But that's our big story. There's lots more that's lined up on the show. That's all about markets, financial markets, and of course, the economy and business as a whole.
A story which we will keep on tracking, but moving on, as per sources, Tata Trust proposes reappointing Mehli Mistry as lifelong trustee, proposal on the heels of reappointment of Venu Srinivasan as trustee for life. Both Mistry and Srinivasan are part of Tata Trust core executive committee. My colleague Anurag Joshi is joining with more details.
Mehli Mistry, trustee on the board of Tata Trust. Tata Trust has proposed to reappoint him as a lifelong trustee. Now, the proposal is coming on the heels of the reappointment of Venu Srinivasan as a trustee for life. This comes after a section of trustees gave a conditional approval for appointing Srinivasan as a lifelong trustee. And the condition was that all future renewals of terms for trustees should be unanimous, and should a resolution not enjoy unanimous support, the support of this group stands withdrawn. The Srinivasan's renewal of term was passed unanimously a few days back by Tata Trust board, and this reappointment of Srinivasan also came just ahead of the end of Srinivasan's term. Mehli Mistry's term as a trustee is ending on October 28, and both Mistry and Srinivasan are part of the Tata Trust core executive committee along with Noel Tata, and this is the high part committee, and that is responsible for the overall functioning of Tata Trust. Noel Tata was appointed chairman of Tata Trust last year following Ratan Tata's demise, and the trusts are owning a 66% equity stake in Tata Sons, the holding company of India's biggest business group. Both the appointments are coming among issues and a bitter tussle which is currently going on among two sections of the trustees. And one of the issues is the listing of the Tata Sons and the timeline for that. The RBI deadline for that pass lapsed on September 30. The other is the exit proposal of Shapurji Pallonji as a shareholder. Shapurji is owning 18% equity stake in Tata Sons.
All right, Anurag, thank you very much for bringing in all of those details and putting those details into perspective for our viewers. Time now for us to take a look at this other important story that's coming in from the commodities segment. Well, amid surging gold prices, lenders have turned cautious while issuing loans against gold collaterals. A large correction in the value of the underlying gold could affect asset quality is essentially what sources are telling my colleague Anjali Palod, and she's here with the details.
That's right. According to sources, lenders are turning cautious while lending against gold collateral as the prices of gold have been surging. Now this can be seen in the form of the loan to value ratio being dropped by as much as 5 to 10% across lenders, which means banks which earlier used to give out 75% of the value of the gold that has been kept as collateral as a loan to the borrower, now are only giving up to 70% of the value of that gold as a loan. Now this has been seen across fresh loans as well as top-ups, where banks and lenders across the board are getting more cautious as they fear that there might be a sharp correction in the gold prices coming ahead. In the past week itself, we have seen some corrections in the gold prices, which also signal the volatility of gold prices as we've seen. And microfinance lenders especially have reduced the LTV ratio on fresh loans by up to as high as 10%. Now, banks are also tightening the underwriting norms and shortening the gold loan tenures. In fact, they are also increasing their focus on recovery and quicker auction of the pledged gold. Now, all of this is an early action that is being taken by banks as, they want to prevent the stress in gold-backed loan portfolios. Now, remember, RBI has pushed the maximum LTV, especially on the small loans up to 2.5 lakh rupees, to as high as 85%, but that will come into effect from 1st of April 2026. But in the short term, banks and lenders are getting more cautious of lending against gold as they fear that the gold that they are lending against might be overvalued, and therefore they're taking a precautionary measure and going ahead and offering much lesser loan for the same amount of gold.
All right, Anjali, thank you so much for all those details. And a big push for India's defense prowess. Defense Acquisition Council, chaired by Defense Minister Rajnath Singh, has cleared proposals worth 79,000 crore. My colleague Prakash filed this report earlier.
Well, it's a very positive development coming in for the Indian defense sector, as the Defense Acquisition Council, chaired by the Defense Minister Rajnath Singh, has cleared proposals worth rupees 80,000 crore to enhance capabilities of Indian armed forces. A very significant development coming in. In fact, the DSC has cleared procurement of NAG missile system, ground-based mobile system, and high mobility vehicles. NAG missile system will enhance Indian Army's capability of neutralizing enemy combat vehicles and bunkers. The induction of heavy mobility vehicles will significantly improve logistic support to the forces in diverse geographical terrains. Along with that, DSE has also given its nod to the procurement of 4 landing platform docks with an outlay of rupees 33,000 crore to carry troops and tanks for sea operations. So very crucial development coming in as far as Indian Navy is concerned. In addition to that, the procurement of 30 mm naval surface gun, advanced lightweight torpedoes have also been cleared by the Defense Acquisition Council. A proposal of procuring collaborative long-range target situation and destruction system for Indian Air Force has also been cleared by the Defense Acquisition Council to improve its capabilities. A very significant development coming in. And the most importantly, these proposals have been accepted by the DSE under the Make in India plan to achieve Atmanirbharta in the defense sector. That essentially means it will provide fillip to the domestic defense sector, and domestic companies will have the opportunity to secure more such projects, defense projects, going forward.
That's right, a big defense push coming in from the government. But let's take a look at now how the markets panned out today in today's trading session. Well, after a strong opening, the Wall Street gave up most of its gains in the afternoon leg of trade as investors rushed to book profits. Nifty hit the 26,000 mark for the first time in trade since September 30th, 2024, but profit booking erased all morning's gains as the index ended below the 25,900 mark. In fact, Sensex also settled 800 points lower from the day's high, and Bank Nifty fell by over 400 points in trade to reach at 58,161. And this after hitting an all-time high of 58,577 earlier in the day today. Now, talking about broader markets, today wiped off all its gains. India VIX, the volatility gauge, that surged nearly 4% in trade today, and that suggests short-term uncertainty amongst markets. market traders. But sectorally speaking, oil and gas, auto along with pharma stocks, they erased all the morning gains, while only the IT counters, they shown in a trade today. It was led by Infosys, which was the top nifty gainer, Ankur, but lots more coming up as far as market interactions are concerned, and we've had interactions with market experts through today.
And the big question is, are financials reasonably valued in the current market setup? And what are the key growth levers for the sector going forward? Can big banks hold on to their momentum going forward? We spoke to market experts to decode their views on this. Let's listen in.
I guess it was more like, I think, March, April, the kind of breakouts that happened with Bank Nifty also. One got a feeling that, hey, this is the guy who can drive, who can lead Indian markets. And Bank Nifty actually made new highs. So in that sense, one got a feeling, but it didn't follow up. It didn't follow up. And it, kind of all those breakouts kind of, sort of disappointed. So that's what it is. As I said, it can change. It can change very fast. But at the moment, one is, looking around. It's been a sideways play.
I think there's great opportunity in the non-lending financial services, as they call it, as people get more sophisticated, more wealthy. And I think the tech layer is helping here as well, right? I mean, today, if you want to do a SIP, you want to move money, it's so easy. The friction is virtually zero.
I think financials are an interesting place to be. I think the banks haven't done much over, say, the last two odd years. But if I were to kind of look at it beyond December, you'd actually see NIM starting to inch up, credit growth to happen probably in double digits. That's going to be a great situation. I'd probably call it the Goldilocks moment for banks next year.
I think the financials space is already buzzing with a lot of activity. We always talk about FI outflows, but over the last 1 month, we have seen such huge deals come in the financial services space, and we are also very optimistic. Not only in banks, but also NBFCs and also non-fund-based financials like wealth, asset management, insurance companies, and so on and so forth.
Well, that's about the banking sector, but looking at some news that's coming in from SEBI, which has released a consultation paper on standardization of process for opening of mutual fund folios and the execution of first investment. What does this essentially mean and entail? My colleague Anurag Joshi is here with the details.
Markets Regulator Securities and Exchange Board of India has issued a consultation paper on standardization